And welcome back to another video. Firstly, we have just reached 1,000 subs on the channel. I want to say thank you so much for the support. I really appreciate it from all of you. From here we can only go to the moon. Now today we're going to look at the dollar index. We're also going to look at what Powell had spoken about yesterday in his statement, what we can expect from the dollar index, and then I also want to go through some data on the Japanese yen as well. Now, if you're new to the channel, a sub would be appreciated, as I provide daily free educational content on the channel. And if you enjoy the video, please smash the like button, as it really helps out the channel to reach more viewers out there as well. And please let me know down in the comments below exactly what it is you'd like me to cover my next video. Now we're gonna jump straight into it. Now we're gonna go, this is an article by CNBC. It says that Federal Reserve raises rates by half a basis point, the biggest hike in 2 decades to fight inflation. Now, if you have been on this channel for quite some time, you know that I have been forecasting a half a basis point for weeks now. We knew this was going to happen. There's no question to whether or not it's going to happen or not. However, we could see how the market had reacted in the opposite direction of what most people thought it would. But do not be fooled by what you see, ladies and gentlemen. Firstly, do not be fooled by that. It is a rule of thumb that for over the years, when interest rates are increased, stocks tend to drop. So what you see right now is basically just some manipulation to make people think that the data perceived was not exactly what people were hoping for. But the dollar index, my friends, is still going to hit those levels as we anticipated. Now let's go over the key highlights here. It says the Federal Reserve increased its benchmark interest rates by a half a basis point. We know that, in line with market expectations, because we all wanted that to take place. So it says here, in addition, the central bank outlined a program in which it eventually will reduce bond holdings by 95 billion a month. The rate move is the largest since 2000 and is in response to the birds owning, whatever the fuck that is, birds owning inflation pressures. Excuse my English there. It also says here, Fed Chairman Jerome Powell underlined the commitment to bring inflation down, but indicated, now this is the most important piece of here, indicated that raising interest rates by 75 basis points at a time is not something the committee is actively considering. So as a result of that, yesterday you probably saw stuff like the Nasdaq, right? The Nasdaq 100, you'll probably have seen the Nasdaq 100 went to the moon. So about that, I just did a breakdown for my Instagram. You can check it out if you want to check the analysis. But you can obviously see yesterday, let's just go on the 1 hour. You can obviously see how the market reacted to that yesterday. But that does not solve the problem. That doesn't solve the long-term problem. Just because the Federal Reserve didn't give us a 75 basis hike point as people would have loved to see, a 50 basis point is still a lot to hurt consumers at the end of the day. That's why I say that do not be fooled by the fact that the Nasdaq or the dollar index made some sort of a U-turn yesterday, because this market has got a high possibility of continuing to the upside. It says here that the Federal Reserve on Wednesday raises, we know that, the most aggressive step yet in its fight against a 40-year high inflation. Now there's still a long way to go for the dollar index, and they're going to continuously continue with hiking interest rates, and we could potentially see them continue to raise interest rates. And the more they're going to hike interest rates, the more the dollar is going to increase in value, and the dollar is going to increase in value. And it might look now as if the dollar was like, okay, we that's not what we want. But if you have learned anything about what I do on this channel, and that is giving you the honest truth, or telling you exactly what's going to happen. So if you're sitting there wondering whether or not the dollar index is going to continue higher because of this little, like a lot of people was going on yesterday saying, the Nasdaq is falling. CNBC reported, oh my god, the Nasdaq jumped 2%. And all of that stuff. I mean, come on, 2%. Look at this. Okay, yeah, we had, and this is not even outside of the consolidation, right? Yeah, we had a similar candle on the Nasdaq. yesterday the Nasdaq printed a similar candle and the markets were crazy. People were even like sending me messages going like, wow, look at the Nasdaq, it's flying. That is nothing, my friends. That is nothing compared to what is going to happen in the long term. Now, coming back to the GXY, it says here the Fed fund rate sets how much bank charge each month for short-term lending, but also tied to a variety of adjustable rate consumer debt as well. Now, this is an important point here. How much bank charge for each short-term lending? What that basically means is that consumer spendings, right? So consumer takes out debt. They have to pay a certain amount of, well, they have to pay back with interest. Interest rates increase. It means that, you know, that interest rate then gets passed on back to the lender, and the lender needs to pay back to a point where they will be able to what exactly they would not be able to afford that. And if interest rates continue to increase, it's going to it's going to make consumers spend less, and if consumers spend less, companies makes less, and if companies makes less, people need to go, and then they start letting people go, and when people start to go, unemployment rate increase, and when the interest rate increase, my friends, then recession comes and hits you like a thief in the night. And when that happens, the dollar goes to the downside. For now, the dollar is going to continue to the upside. Regardless of what they said yesterday, the dollar is still going to increase in value, and we can expect that to happen as well. 50, a half a basis point is a lot, is enough to make investors want to get into this market here as well. The next thing I do want to speak about is the Japan basket. So the Japan yen, right? Just remove that. Is the Japan yen. Now, for those of you that has been following the yen has been quite bearish over here, and we've been waiting for this pullback to happen for forever. However, I just wanted to inform you guys, just so that you can get an understanding to how this actually works as well. It's because a lot of people had been asking me, why has the yen fallen out of favor, or why has the yen been weakening? I think it's very important to understand that first and foremost, investors simply are taking their money out of the Japan yen. That's because while interest rates are sharply rising almost everywhere in the world, they remain at rock bottom levels in the land of the rising sun, which is Japan. So every other country is raising interest rates. We see the US dollar, Canada, the pound, they're all raising interest rates, but Japan is just not doing it. And there's a good reason for that. There's a reason why Japan's not doing it. Well, the simple reason for that is the Bank of Japan has been implementing an even more extreme version of what's known as quantitative easing, called yield curve control, which is a YCC, okay, consisting of not only keeping short-term rates low, but also explicitly capping long-term ones, because investors can earn far more interest on their investment elsewhere. They fleeing Japan, increasing selling pressure on the currency. Now, even without the yield curve control in effect, it's worth nothing that Japan's economy is in a very different place than the rest of the G7 countries. Its economic growth is far lower and its inflation is far milder, given Japan years long a battle with a deflation, and that led to investors to put out a low probability on any chance in the Bank of Japan's policy, and created a one-way bet against its currency. Now, what's more, okay, rock bottom interest rates have made the yen go funding currency for carry trades. These are popular foreign exchange trades where investors would sell the yen against a higher yielding curve currency, maybe like the Australian dollar, allowing them to pocket the difference in yield between the two. And since they're selling the yen, it's been sending the currency value lower and lower. Now, also speculators and trend followers have further continue to fall. Okay, because everyone's just jumping on the bandwagon. But the question is, has the yen fallen too far? Like, has this been too much? Well, it's possibility. Well, it is a possibility, because I expected this market to pull back. But it is a possibility that the drop in the yen has been steep. Okay, and when I say steep, if you look on the daily, it looks even more uglier as well. This is a steep drop over there, okay, and it has fallen against almost every currency, not just the US dollar, and its currency real effective exchange rate the value of the currency against the weighted average of most, it's major. So it's been weak against the major currencies out there, like the euro, Swiss franc, the like GBP, Australian dollar, Canadian dollar, US dollar, and at the moment the yen is now considered the most undervalued G10 currency versus the dollar as well. The question is, why might the yen even go up? Why should the yen go up? Will the yen even go up? Well, first, markets may be underestimating the risk of a change in policy. Sure, a weak yen can be positive for the economy, but it's not if it gets too weak, if inflation pressure squeezes. Now, that is why we can hopefully, well, not hopefully, but hopefully we'll get the pullback on the yen, because this market has been way overvalued. And I just thought I'd give you guys the reason for why this is happening, so that you can understand how that works as well. Now, that's it from my side. Thank you for your time, and as always, cheers for years.